Okay, so good evening. I'm Chris Coleridge, founder and CEO of Carbon13. This is roughly our 60th webinar on the Venture Builder for the Climate Emergency, and explaining our program and then opening the floor to Q&A. I'm going to try to whip through the slides tonight to try to get to that Q&A as quickly as possible, but don't hesitate to come in if you wish with any questions as we go along. So if you think of the climate change problem as an overflowing bathtub, right? This is a reasonable way of thinking about it. We've put too much carbon into the atmosphere already to maintain a stable climate, and the tap is running pretty close to full, and we're sort of gradually turning off the tap, but we're doing it far too slowly, right? We're net zero means the tap is turned off. We're not adding any more carbon to the atmosphere. There's a sort of whole separate set of problems around how do we drain some of the carbon out of the atmosphere. And one of my academic colleagues at the university runs, well, I mean, quite a famous man nowadays because of running Independent SAGE. Sir David King runs the Cambridge Centre for Climate Repair. But we are more about trying to get to the net zero sort of state. Lots of good news stories out there about renewables, around electrification of transport and so on. And those are good news stories, but any attempt to come up with a plan to reach net zero tends to have quite a lot of sort of white space at the bottom. And so entrepreneurship is one of the social institutions that humanity has developed to try to tackle this the innovation problems that we don't really know the answer to. We don't claim that entrepreneurship is the whole answer. We just claim that there are certain types of innovation that are, based on the history of business, are going to come from entrepreneurs, and that when we think about ways that we have as a species to rapidly diffuse new ways of doing things across national boundaries and through industries, entrepreneurship, it tends to be the starting point. So in a very real sense, we need entrepreneurship, and we're sort of in a funny stage at the moment, mobilization stage of the crisis, where the public sector is beginning to turn to the private sector and say, do something, you've got to do something. And so in that situation, there's a sort of mobilization of the innovation capacity of the economy, mobilization of capital that is a bit different to the sort of rollout of the internet, which is the kind of entrepreneurial context that we've all lived in for the last 30, 40 years. And it's more like a sort of a war effort, right? Now, what do we know? The history of innovation tells us that if you want breakthroughs, breakthroughs come from communities, because breakthroughs arise from unexpected combinations, unexpected recombinations of factors of production and different ways of doing things. And so when we talk about a diverse community, when we talk about inclusivity, we're not just talking about sort of trying to get gender balance or trying to make sure that white people are not overrepresented. We're talking about a necessary condition for doing breakthroughs, right? And I think, if I try to put it in a more concrete way, we could say, well, I've been building this for 2.5 years now, and on my journey, I find cliques of innovators who would call themselves social impact entrepreneurs. And what you tend to hear there is, hey, it's a behavior problem, right? Climate change is a behavior problem, and we need to kind of bring in new products and services that are going to move people's behavior in the right way. And then I talk to engineers, and the engineers say, consumer behavior, fine, but really this is an engineering problem, and the emitters are these major corporates, and we need to kind of get the engineering right. Now, they're both right. We need both elements of the puzzle to get it to get it right. But engineers tend to talk to other engineers, and social impact folks tend to talk to other social impact folks. It's, you know, it's just the way it is, right? So part of what Carbon13 is about is bringing together unusual combinations of people who then team up in unexpected and unusual ways. And certainly in cohort 1, we've already seen some of that happening. So if you like the sort of social explanation, the sort of, hey, society works in this way explanation, then you've had that for the last 5 minutes or so. But of course, we could also think about the individual explanation and say, look, if you personally want to do something about climate change, and that's, you know, certainly my kind of, that's where I started here, is that I thought, okay, I was a bit optimistic about innovators coming in and solving this problem in good time. We're a bit late. So I'm going to devote the rest of my career to working on climate change. What do I know how to do? I know how to run entrepreneurship programs. So that's going to be my contribution. And it's basically my premise, personal premise. You don't have to share it, that whatever you're good at, you should devote it to fighting the climate crisis. And that's both sort of, you know, the right thing to do, and also just happens to be something that plugs into the biggest business opportunity, or the biggest opportunity in innovation terms for a long time. So what is a net zero startup, right? We picked this benchmark of 10 million tons about 2.5 years ago, taking 10 million tons of CO2 equivalent emissions out of the emissions base. And in simple terms, we say, okay, what's the business as usual case? What's the case if your innovation gets off the ground and thrives? The difference between the two, that's your avoided emissions, right? That's and you can think of that in terms of unit economics, right? Carbon unit economics, where as your venture scales, each time you get a new customer, each time you sell another unit of your offering, the customer is switching from the old way of doing things to a new, less carbon intensive way of doing things, right? That's the sort of, that's the nub of the matter. Early on, I got some of my students to do some analysis and look at, okay, is it possible for a startup to do this sort of 10 million ton level of emissions avoidance? And we looked at the Clean Tech 100, and we very rapidly found a few examples. We looked at the startups that have come out of the Elemental Accelerator in Hawaii. They funded about 120 startups so far. And we found some more that, you know, it's easy to kind of do the maths and say, yeah, you know, they're now, back 2.5 years ago, 10 million tons was a sort of ambitious number. Everybody who knows anything about carbon who heard it was like, oh, 10 million tons, that's kind of amazing. Now, you know, Kara Swisher of CNBC is on talking about, well, the next trillionaire, or the first ever trillionaire, is going to be a climate entrepreneur, right? And there's a bunch of Silicon Valley climate funds starting up and kind of saying, we're looking for 0.5 gigaton removal, not just 10 million tons, or not just, you know, some impact. We're looking for really existential level removal. And, you know, what is that all about? I mean, in a way, it's about the same thing, right? Our 10 million tons target is, you know, in a normal accelerator, what you hear all the time is unicorn, unicorn, unicorn. What, you know, is your idea venture size to be a unicorn? In Carbon13, because we're focused on, you know, financial success is going to come from carbon success. We're saying, well, you know, ambition, as opposed to an idea where the scale is too small, is really is really linked to the level of carbon impact. Now, there's two things over the last 2 years. We've seen two kind of movements, right? We've seen more and more consumers, especially in Northern Europe, getting anxious about climate change. I mean, quite correctly, there's a lot to be anxious about. Breakdown of the food system, for example, you know. And we've seen startups springing up in response to that. And I could broadly categorize them as saying, you know, buy this climate friendly thing and you will feel better about your climate anxiety, right? Now, I'm not saying that's not a business opportunity. There are business opportunities there, and there are even business opportunities that that do actually move the needle on carbon, right? We've got a venture in our current cohort, or a team that's working on a venture in our current cohort that is looking at a sort of behavior change type of B2C offer, which we kind of like and kind of believe in, and sort of, you know, we're running the rule over it. We've got to make our investment decisions for the first cohort in about 3 weeks time. So, you know, we're sort of, we're facing the acid test, but we certainly are impressed by it. We don't rule it out. But where we think most of the energy is in this space is on the net zero pledge side. Is on the sort of the major corporations and smaller but still significant corporations that are making net zero pledges and saying that they're going to find ways to reduce their carbon footprint to zero. That is the class, you know, those organizations, and I've gone to, you know, and sat in meetings with a lot of them as I've raised the corporate sponsorship money to pay for this thing over the last few years, or 2.5 years. You know, these are your classic customer, recognizes they've got a problem, hasn't worked out how to solve the problem, right? And that is an essential precondition for all entrepreneurship, right? So we think that's where a lot of the energy is, and most of the ventures on our current cohort are not B2C focused. Out of the sort of 22 teams that we've got going through right now, 4 are B2C focused, and the rest are sort of enterprise and enterprise focused. You know, our premise overall is over 5 years, we're going to run 20 cohorts, take 1,000 entrepreneurs through the program. Based on our success rate in cohort 1 and what we generally know about these sort of talent first programs, we expect to invest in 150 ventures. And if 40 of those actually kind of get somewhere and break through and achieve the 10 million tons, then collectively Carbon13's impact will have been 400 million plus tons. And that's about 1% of global emissions, or about the carbon footprint of the UK. So that's the sort of level of ambition that we've got, right? And fundamentally, right, we're interested in these 2 axes. Scalability, right? That's familiar to all entrepreneurs, right? Is the concept of scalability, and how can we sort of design our business model and design our value proposition indeed to be highly scalable. But we're also interested in additionality, right? So how much of a difference are we making fundamentally to the emissions base, right? And so top right is where we would like to be. Top right is making changes that are not already baked into the system, right? I mean, frankly, we do have ventures that we will invest in, and that I think, you know, have a decent shot at being successful, which are sort of riding trends that are already baked in, right? We know, for example, that there's a massive jobs transition that's associated with the sort of shift to a net zero economy. There are a bunch of interesting plays to be done around enabling that jobs transition. Is that fundamentally changing the game? No, not so much, right? It's an enabler. Good business opportunity, still very interested in it, may well invest in it. But what we're most interested in is innovations that are really making very substantial changes to you know, people switching from the old way of doing things to the new way of doing things, and that driving some interesting change. All right, program itself. It's a talent first program. The vast majority of people join as sole founders, looking for a co-founder, right? We do get some teams joining. In the current cohort, we had 4 existing teams who are now still 4 of our sort of 22 teams that we've got at the moment. But everybody else joined as strangers. And during phase 1 of the program, team up, right? And on the next slide, I'll talk about the sort of structure of the program. So we go for roughly half technical founders and half commercial founders, right? And so the technical founders are software developers, chemists, sort of material scientists, engineers of various kinds, scientists. And what's the concept? They're the CTO. They've got to take the technology to proof of concept stage. right? And it's been fascinating to see how on cohort one, we've got some folks who have been sort of wandering in the wilderness, as I would think of it, for years, trying to get their innovation off the ground. And they've teamed up with a commercial founder, and that commercial founder has been able to sort of put the business model wrapper, put the value proposition wrapper, put the customer development wrapper around it, and really get investment ready very quickly. We've also got technical founders who have entered sort of after a postdoc, after a PhD, and they've got some valuable IP, and they need some help to work up that IP into a commercial proposition. One of my technical founders said to me, "Well, it's very simple, Chris. When you think about ideas, all the technical founders should have an idea, and all the commercial founders should have no idea, right?" And I, yeah, that sort of works. But what we have seen in the current cohort is where the technical founder is a software person, it's just as likely that the idea came from the commercial side of things, right? For the commercial founder rather than technical founder. And we can immediately see that, you know, the software skills are more portable, right? You know, across different business ideas. In general, though, I would say that, you know, your ideation is not a sole, you know, is not really a process. Like, you may have some ideas, right? Great. But if you're an experienced entrepreneur, you know that having ideas, you know, ideas are not the problem, right? Fitting something that is actually going to work into the real world is the problem. And so the best ideation in our view is team ideation. And so in a sense, we put a great emphasis in the program on sort of bringing good founding teams together, getting them to do a lot of work to sort of make sure they've surfaced all the sort of things that usually don't get talked about until 3-4 months into the project, and then getting them rolling more quickly because they've done that teaming work at the beginning. And some of that might include a bunch of ideation. You know, we've got a great team that I'm super pumped about, if I can use a bit of young person slang, at the moment, which is a team that came together, and it wasn't obvious from the start what their sort of thesis. Just looking at their CVs wouldn't have told you, well, where are they going, you know, what are they going to do? Where are they going to take this? They did a deep dive into a particular sector. They've come up with an idea which I really feel pretty strongly has exciting legs, and they're sort of preparing their investment pitch now, and it certainly validated my assumption, if you like, that it is possible for a team of founders who basically start with no idea to come together and really work up something that's highly investable in a fairly short period of time. On the commercial side, you know, our dream commercial founder, and I hope that I'm talking to a bunch of them right now, is an experienced entrepreneur, right? Because an experienced entrepreneur is going to be able to sort of take that technologist in hand and say, let's work together, and I know all the steps on the journey to making this work, right? You know, when we got started 2.5 years ago, you know, if I talk to investors, the response was typically, well, you know, clean tech is sort of, you know, it's an interesting space, but I lost a lot of money 10 years ago after An Inconvenient Truth came out. There was a little bubble in clean tech, and I lost a lot of money. So I'm not that hot on your space. Well, in the last 2.5 years, that has completely changed, and there is a new fund starting up. I can say with no fear of exaggeration, every week in 2021, we have seen another fund coming along and saying, yes, we are planning on writing £500,000 to £2 million checks to seed stage ideas in this space. And I'm thinking, well, where are these ideas? This is an interesting proposition. And of course, that has meant that our Carbon13's plan, if you like, started out as, well, we're going to showcase these climate-focused ideas and get them rolling. And now it's much more, we're going to make sure that these ideas are well-founded from the start, that you've got good teams who kind of do a lot of the foundational work, as I mentioned, and that the value propositions and business models they're working on are fundamentally sound as well, right? And that we're kind of we've got the right, you know, the first principles is the phrase that you'll hear if you join us on the program, is something you'll hear a million times, is that we want to work from first principles, because first principles projects mean that you're not wasting your time, right? That you're not doing something which, you know, 3 years down the road, you're going to say, wow, I was trying to do something with impact and I gradually pivoted to something with no impact. So that's sort of the core of it. As I said, I want to rip through these slides. So this is the program. 8.5 months. Next cohort starts on the 21st of September. Applications close in 13 days for that cohort. 3 phases, a teaming phase. Of course, some ideation goes on during that teaming phase. Second phase, you've teamed up. If you don't team up, you're off the program. If you team up, and 53 out of the 59 people who joined us in cohort 1 did team up. If you team up, then you go on to the next phase. You're validating the idea to the point where it's worthy of a £75,000 net investment. And then the ventures we invest in go through to phase 3, and that's a classic accelerator, right? Now, one of our, I mean, you know, we've invested in you. We're your partner. We want you to succeed. We're trying to get you to be ready to raise again. You know, would be a simplistic way of putting it, or to put the value into the venture. That means that you're going to be able to raise at a good valuation. Our investment is in the form of an ASA, or what's called a safe note in the US, so that, you know, if you're a rocket ship and you're ready to raise at a 5 million valuation, our stake ends up being something in the neighborhood of 5% in total. If you're going to raise at a sort of 1 million valuation, our stake ends up being something like 11 to 13% in total. You can see the details in our FAQ section of the website. Cheesy photos. Cohort 1, 59 founders, 23 teams. Well, it's 22 now. Average work experience is a bit higher than we expected, and I think we're sort of planning for, anticipating a slightly lower average years in the second cohort. We think we have too many questions in our application form, which are kind of, you know, do you have a lot of experience? And some of the youngest people who joined us, the youngest was 28, but some of the youngest people who joined us have made really, really fast progress. So, you know, I'm not saying we're going to radically change that number, but it might change a bit. 55% technical, 45% commercial. Roughly a third had some kind of Oxbridge connection, mostly Cambridge, but we're a grammar school model, you know, best talent in the world, and you use the Cambridge ecosystem as your platform, right? That's the sort of premise. About half the technical founders have PhDs, half don't. 1/3 female, 1/3 minority ethnic. Of course, we'd like to get gender balance. We're working to do that, but we're off to a good start. Half of our 22 teams have female founders in the team. You know, what's our right to exist? It's a question every entrepreneur has to answer about their organization. Of course, we provide access to finance, but frankly, that's not so hard right now. You know, if you have a good climate tech venture, you can raise money. That is kind of the least of it. There's a fair bit of research that shows that, especially in Europe, unicorns are coming from accelerators, right? And that there's something about the sort of boost of being in some kind of ecosystem that makes sense. It's a fundamental premise of the design of Carbon13. From, you know, I've been teaching entrepreneurship for a long time, and my observation of bad accelerators is that bad accelerators tend to be run by one rich investor and his mates, right? And we said, well, we don't want to fall into that trap, because the whole point of an accelerator should be to give you a sort of a greater choice of investors rather than to sort of funnel you in the direction of one, right? And so we've got the climate tech funds, we've got social impact people, we've got as many different flavors and as many different cliques, London people, Cambridge people around the table. And I'm not saying we're playing them off against each other, but we are reducing the information asymmetry around the right venture of finding the right the right investors. So showcasing your work is about showcasing it as broadly as possible to a wide range of investors, right? This is what we, you know, what I've observed, that, you know, that's what makes Y Combinator or similar. That's what makes those places be sort of a cut above the rubbish accelerators, is that they're a player in their own right that has a lot of different conversations going on all simultaneously, with lots of different flavors and sort of families of of investors. There's something more subtle that's going on other than just sort of networking, showcasing in an accelerator. There's an accountability thing. You're making commitment to yourself to do it. You kind of say, well, this is going to be my main focus for a while, and you're really kind of putting in the focus. There's also something about balancing periods of exploration of lots of different things that you could do, and okay, now stop exploring, start converging on a pitch, right? Converging on a version of the story that's going to get you the funding, that's going to get you to the next stage. Talked about diversity, talked about energy. Because we're sector agnostic, you know, we can see in the first cohort, you know, the buildings folks are friends with the food folks. They trade, you know, they support each other, right? I don't just mean in wellness terms. I mean in terms of buildings person runs into someone who's useful to the food folks, and they freely reveal, as we say in the in innovation scholarship, they freely reveal stuff that they don't need, but that is useful to the other people. Got 140 domain experts. We don't use the term mentors because we think it's a bit, it implies that one person knows the answers. And we've got entrepreneurs in residence, and we've changed the name from venture partners to investor partners, which is those investors that we feel comfortable enough with that they come in phase 3 of the program and sort of run office hours, and sort of you have an opportunity to form relationships with them. I think I've covered all the points on this slide. I'm going to pause. I have got more slides, but I'm conscious that I'm talking to you know, if you're in the right webinar, I'm talking to an experienced group, and maybe I should take questions rather than telling you how to come up with good ideas, which is the next slide. I mean, I'm not saying I won't cover this slide. I'm very happy to cover this slide, but let's have some questions first. We're an elite group, so feel free to just unmute yourself and ask, or if you feel better typing in the chat, then do that. Any questions? Fire away, Nicholas.
Hi, Chris. I have about 2 questions. The first being, well, for context, I happen to already have a team, a team of 6 of us. We're a diverse group comprised of, I guess, the 3 founder archetypes that you have listed there. And so I'm wondering, is something like this allowed, firstly, in the grand scheme of things?
Okay, you don't see a lot of startups with 6 founders. And I think it's a simple mouths to feed problem, right? That you know, you're not, no matter how good you are, no matter how much progress you make, you're going to find it very difficult to raise an amount of money that's more than anybody else is raising. Just because you have 6 founders, right? So if those 6 founders all happen to be able to support themselves, then perhaps it can work, but it is challenging. It is challenging to make it work. I mean, it's fair to say that investors do like the idea of more technical founders in the sort of sweat stage of the venture, you know, sweat equity stage of the venture, because they feel like, okay, I'm getting more bang for my buck in that sense.
Yes, which so
you know, yeah. So it's not totally implausible. I'll throw out my email address at the end, and you know, I think we should probably just have a one-to-one, and I can explore with you the intricacies of your situation. But it is unusual.
Yes.
I guess
yeah. I guess the second question that I have now is related to the point that you made about the safe note. I guess our plans had more or less been towards kind of inching towards like a blockchain, a blockchain type governance structure. And so, so that the equity piece wouldn't necessarily fall within the confines of said structure. And so we'd mostly be relying mainly on grants, and we wouldn't necessarily become public, at least in a traditional way that I guess typical traditional startups would make an exit. And so I'm wondering.
So look, I'm very happy to talk. I'm very happy to talk this. Yeah, I'm very happy to talk this through one-to-one. If you can show me how this is going to scale, then there will be some basis for us to talk, right? My prejudice, which is prejudices are there to be overturned in my case, right?
Yes.
My prejudice is that it's really, really hard to scale unless investors see a way that they're going to make a lot of money out of it, right? So maybe you've got a way that investors are going to make a lot of money out of it, but it's still going to be, but let's talk one-to-one. Okay, John Reed, you have a question.
I do.
Thanks,
yeah, thanks for the presentation so far, Chris. So I'd be quite interested to kind of get your take. We've kind of we've been actually introduced because we've kind of got Boris, who's on the call, who's actually interning with us at the moment. We're an external startup in the tech space. We're called Green Pixie, and really we've kind of come together from we're quite experienced, especially in marketing. That's kind of my background. I've kind of run marketing consultancy and that type of thing, and kind of have a proven. One thing that I can do is get demand and revenue, and the general premises are around digital carbon, which essentially optimizing websites to reduce their carbon output is the first stage of the kind of service we provide, which is highly scalable, and we have a kind of free committed technical developers who can essentially scale in that direction. What I kind of want to know is the ability to kind of prove revenue, because we can pretty much prove revenue up to a point, as we are. It's kind of self-funded by myself at the moment from one of my other kind of consultancies. Is this a good position to be kind of entering into this kind of VC world?
Yeah, I mean, look, the way you could think about VCs is, what we might think of, what we might think of as an investor's mindset is that they might say, okay, I really hope that with this investment, you're going to be able to turn the corner and go cash flow positive and no longer need any more money from me. That's a kind of classic angel investor, right? A VC is going the other way. They're saying, what I really hope is you need more money from me, right? Because I don't start to make a lot of money until you really need a lot of money from me. So my early investment is really a marketing expense to hopefully get to the point where you need a tremendous amount of money from me, and that's that's what we want. So being able to prove revenue is like a marker of quality, right? But if it's the whole strategy, right? If it's like, well, first we prove a little bit of revenue, then we prove a lot of revenue, then we prove even more revenue, then that doesn't suggest that you really are working in the direction of, well, eventually I want 50 million, eventually I want 100 million, because you're working towards becoming self-sufficient rather than sort of getting into a codependent,
sure.
And that word has negative connotations, as we know, right? Into a codependent, into a codependent situation. So
sure.
I don't know. Okay. I don't know, John. You give me.
Yeah. Sure. That's yeah. Like it's. I totally see where you're coming from. I think just in general, just we kind of take an MVP methodology. This is like the first iteration of what's worked. We have several ideas of scalability, which kind of varies in terms of technical complexity and ambition. which we
Yep.
kind of would put out there to VCs. Essentially, without going too much into it, it's kind of like a global server network, which we kind of would help execute. And the whole idea of like digital carbon.
Okay.
We start with,
John,
we
you're
start
frozen,
with
but everybody else is frozen as well. So I think it's probably me.
Yeah, no, I think you're still there. I think you're still there.
No,
Chris,
I lost you. Unfortunately, I lost you after you said we've put it out there to VCs, and then I lost you.
Yeah,
but
sure,
look,
sure.
You know, John, if you're saying, you know, can I pique your interest? Yeah, you've piqued my interest. Please apply. You know, I'm not, you know, I'm not made of stone. Go. It sounds intriguing. It sounds intriguing. Okay. Great. Any more questions? You can raise your hands, or you can raise your hand, or you can unmute yourself.
Hello.
Will.
Hi. I had a question about like what a general funding from VCs and going forward. What does that look like in terms of, is it like a more of an interview thing, or is it more conversations that you get put in? Like, is there a rigid structure for that, or is it just totally dependent on who you're speaking to?
It's totally dependent on who you're speaking to, because you know we have investors have so many different theses, right? You know, we've got well, this is going to be recorded and put on our website, so I have to think carefully about what I'm saying. We have a whole bunch of different types of investors, right? We have investors who are really going to say, wow, if it has a green impact, I'm super interested in having a green impact with my money. So, you know, let's proceed on that basis. We have other ones who are basically betting that there's going to be a carbon tax. And the whole logic of their thesis is, if your business is going to do well under a carbon tax scenario, then I'm interested. You know, it's really across the piece, right? So part of what we do in phase 3 is that every week, at least one, and typically 2 or 3 different investors come in and hold office hours where you just, you know, they've heard your pitch, right? And you know, you just sit with them for half an hour and ask hopefully intelligent questions, and they give you their opinions. Investors' opinions aren't necessarily, you know, just because they see a lot of deals doesn't mean that they actually are geniuses. But you know, it can be interesting stuff. But really, a lot of what we're doing in phase 3 is helping you work out what is a good financing strategy for your business, right? Given the kind of thing that you're trying to commercialize, what is right. And sometimes that's, you know, if you're doing something digital like John, then, you know, it might not look that different from a Silicon Valley type of pattern, right? You know, if you're doing something where there's some hard tech involved and there's some capital expenditure needed, and that could be the case if you're working with one of, you know, our material scientists or engineers or whatever, then it's a different, you know, it's a totally different set of investors you talk to, and a totally different sort of strategy that you drive.
Yeah. And so do they often give you stuff to go on and do, or things that they would ask before doing the investment, like they'd like to see this, or they'd like to see something else? Is that something that usually happens?
Yeah. So if you see this slide, this is kind of, you know, this is a reasonably good generic model of how this works, right? Is that, you know, at the first stage, you're not building a company, you're just investigating the question of whether it's a company worth building, right? Mm-hmm. So you get the founding team together, you identify who you think your early customers are and what problem they have, and like, how do they see the problem? Mm-hmm. You then come up with a value proposition, which is not a product or a service. It's just a, hey, if we build this, will you buy it? You know, will you sign, you know, will you pre-order? Will you go with us on the journey? You then prove that if there's other resources you have to access in order to make this happen, you prove that you can open that door. Once you've done that, that's what opens up the door to getting, you know, proper investment. And then you're building an operational team. You're using that investment to build an operational team, move from, hey, I'm just talking to my customers to, oh, I have a way to actually get an order from them. You start building the product, you think about your strategy and what's going to be unique about you, and that's what opens the door to more money, right? And then it starts to look more like a real company with a finance department, an HR department, you know, all these different, all these different things. So when you say, do they, you know, the way you could think about, you know, this stage is it's about de-risking, right? That when you say go away and do stuff, it's like, well, like John was talking about, if you can prove revenue, well, that takes away a big, that's a big risk factor, right? That, you know, one of the questions that's always got to be in an entrepreneur's mind is, yeah, okay, the customer says they're interested. What about if I say, can I have your money? Are they still interested, or do they suddenly stop being so easy to contact? So, you know, there are different risk points around this, the entrepreneur's pizza, as I call it. But it's you know, we're helping you de-risk the project. As you de-risk the project, the value of the project goes up.
Yeah, cool.
You know,
Yeah, no,
from something which is just a blob to something which is people could actually take a bet on.
Yeah. No, yeah, that's really interesting. I'm actually John's technical co-founder, so at the kind of proving stage at the moment.
Cool. Okay, great. Great. Any more questions? All right. So we've got, so, okay, I'll say a couple more things about, you know, this live in the future, build what's missing. That's not my line. That's Paul Graham's line from the guy who founded Y Combinator, right? And the idea is, look, things are changing politically, things are changing socially, things are changing technically. The entrepreneur's job is to figure out what are the new economic arrangements in society that are going to kind of catch the business side of things up with the political change, the social change, and the technical change, right? You know, that's the sort of, that's the job of an entrepreneur. So, you know, another Silicon Valleyism is, well, the things that the most intelligent people are doing for fun on the weekends, that's what everybody's going to be doing in 10 years time, right? So that, you know, it's this kind of, you know, the future's here, but it's not evenly distributed yet. Thinking, you go to whatever the cutting edge is, and that's where you'll find people already fiddling about with and experimenting with the, you know, what needs to be done next, right? One of the ventures, one of the teams that I'm really kind of in love with at the moment in the first cohort is doing you know, they're doing something really interesting in regenerative agriculture, where a lot of the effort in regenerative agriculture so far has been around kind of, you know, how can we get farmers to be more green, right? And be better stewards of the land. And that, you know, that's an important work, right? But this team has come up with something which is going to make it easier for farmers to see the price incentives. You know, it's a platform that makes it easier for farmers to see the price incentives that are there for them to go in a regenerative direction, right? So I like this because it's sort of like, well, yeah, we've been developing the concepts of regen ag for a while, and the sort of, you know, what are the mechanisms that we can use to get farming to be less carbon intensive? Now let's find the ways that we can kind of increase the pull factor of like, yeah, and there's some economic reasons to do it, not only kind of I care about my planet reasons to do it. So it's a nice, it's an example of kind of the economic side catching up with the social, the technical, the political side, right? But we don't have to be pioneers, right? You know, many ideas, the breakthrough, it comes not from the first team, not from the second team, but from like the 17th team to come in the market, right? And Shakespeare was ripping off other people's plots and making them into better, more popular versions of them, you know, the old version had been. You know, good entrepreneurs are often doing exactly the same thing, right? You know, I really, it is very convincing sometimes when you get a pitch, which is like, okay, you see that business over there that seems to be working well? It's that, but we're going to make a twist. We're just going to do it slightly more in a more interesting way, right? In a way that's going to catch the user's imagination a bit better, right? Another Y Combinatorism is follow the founder's core endowments, right? Is the idea that, and I touched on it when I said, once you get the team together, the ideation happens in a different way from the way it happens when it's just one person, right? And so, you know, you're ideating based on what you do, your skills and your sort of capabilities, but also based on the relationships that you got. You know, how can you fit what you can do into customers that you already know or customers that you can get access to, etc. Right. Another way of thinking about, you know, what are the good entrepreneurial opportunities is to say, well, it's, you know, the corporates don't want to solve it, but it's still a big opportunity. That's a good opportunity for an entrepreneur, right? Typically, why does a corporate not want to solve it, you know, a particular set of problems? It's, you know, they don't like to cannibalize their own revenue streams. They don't like to do things which undermine the logic of their existing business model. If you look at BMW, you know, BMW has had a shared car club as part of their business for a long time, over 10 years. Is there any sign that it's becoming, you know, the core of BMW's business model? No, of course not. They're a car maker, right? They're going to play, you know, the history of business is the corporates play around with the new stuff, but they don't actually commit to it if it undermines their core business model, right? So, you know, if you think about the circular economy, corporates like the half of the circle that's about, hey, make your supply chain run more efficiently because of less waste, etc. They don't like the half of the circle that's about, hey, customers, spend less money on solving this particular problem because you're going to do it in a dematerialized way or just a different kind of way. In the same way that revenue streams are sticky, mindsets are sticky, right? Corporates don't tend to be able to do innovation that's sort of crossing boundaries, crossing, you know, that isn't sort of firmly rooted in the traditions and logic that they became large companies on the back of. If you think about fintech, right? Fintech exists because bankers can't get their mind around digital. So the fintech entrepreneur creates a digital version of a financial service and sells it back to the bank because they just can't do it themselves. Entrepreneurs are typically willing to get going before the ink is dry on the way that the new way to do things, right? They sort of, you know, in a corporate, you wait until the new law is passed, the regulations are very clear, and then you do a cost benefit analysis and you make changes on the basis of that. Entrepreneurs are more likely to say, yeah, I think the world is moving in a certain direction. There's going to be some new rules about this or about that. That's going to create some new opportunities. Let's get going and figure it out later, right? Uber is a company that people love to hate, but you know, in most of the places that Uber launched, they were illegal, right? And they just launched anyway and said, well, people are going to love what we do, including all the politicians are going to like to be able to get an Uber. So we're not going to have a problem. We're just going to get going and worry about, you know, the regulations are going to have to conform to us, right? Now, I'm not necessarily suggesting that you kind of go that far, right? But I am saying there's a, you know, there's an opportunity that comes from, you just know there's a big opportunity there and you're starting from zero, as opposed to a corporate starts from a 10% profit margin and anything that's uncertain looks like, oh, that could be less profitable than our current business, so we don't like it. This is really a list of 3.5 things that corporates are bad at, because sometimes corporates do drive behavior change. Nespresso is an example. Apple is an often cited example, but most of the time it's entrepreneurs who kind of get in the cracks and figure out, okay, what are the new ways that we're going to arrange our lives? I've been over this stuff. We don't have time for this stuff. Yeah, I'll say a little bit about this. So we're basically I kind of have touched on this already, but we're working across, you know, the first 5 sectors here: energy, buildings, mobility, agriculture, manufacturing. You know, that's where emissions are coming from, right? So if we can find innovations that decarbonize, then we have a potential win. The consumer one is a sort of separate box, because building a consumer venture is sort of a separate discipline. You know, it's more about low cost of acquiring customers than it is about anything else. And then we have a green finance startup in our midst. You know, finance. What's the social purpose of finance? Why does civilization put up with finance? Because the purpose of finance is to direct resources to the good projects, right? And so the definition of good projects has to change to not include projects that are destroying the planet, right? So, you know, I know it sounds like, you know, I'm very conscious when I say something like that, that it sounds idealistic, but the beautiful thing about this space is that it's not actually very idealistic at all. You know, whether climate change is happening is a one-way bet, right? Whether the world is going to have to make some adjustments in order to deal with climate change, again, a one-way bet, right? It's a, you know, to be a successful entrepreneur, you have to catch the wave at the right time, and you have to do, you know, you have to get a lot of other things right. But the fundamental law of strategy is play on favorable terrain. This is favorable terrain, right? Anyway, I'm going to shut up. We have 5 more minutes. If you have any more questions, I'm happy to take them. Otherwise, there's my email address. Feel free to get in touch and I'm happy to chat further.
Hi, Chris. Just got a quick question on the measuring of carbon and where you kind of draw the line with kind of how you measure the CO2. So really, just through the digital carbon we go through, we actually have a way of kind of measuring carbon and how much we release, how much websites produce, for example, and we could kind of make a ledger that could basically record the amount of carbon saved. But we kind of also, is there anything attributed to kind of awareness carbon? So kind of like having some type of kind of giving exposure to the issue essentially through a brand or something like that, which spreads the word. I guess it's difficult to quantify. Is that kind of included in your 10 million tons? If you get what I'm saying. Yeah, I'd be interested to get your take on that.
Do absolutely. Yeah, I mean, I think, you know, look, when it's the fundamental nature of being an early stage startup that you've got this kind of small little thing that you've built and that people are paying attention to. And you're sort of saying, yeah, look at all the changes this is going to make, right? Those changes haven't happened yet, right? And, you know, we're used to, we just accept as a normal part of day-to-day reality that, you know, sometimes those crazy entrepreneurs are right and it turns out to be $1 billion business or whatever, you know, a major organization of some stripe, right? So, you know, when you are saying, oh, you know, we're small, but we're going to be big, the world just says, okay, yeah, that's a normal thing to say. Now, what we don't have yet is a vocabulary or a sort of way of having it be completely normal when you're talking about carbon, right? We work with an outfit called Impact Forecast, and they're one of about half a dozen companies across Europe, mostly across Europe, that are trying to, you know, work out, well, what are some methodologically robust ways of forecasting what a startup may do, right? But a lot of it is, you know, part of your theory of change that you've just put forward is, yeah, we change practices on a, you know, we get in there and we change somebody's approach from a carbon intensive one to a less carbon intensive one. That has a certain amount of impact. And then we believe that there's a further knock-on effect, right? Now you have got to, you know, with our help, and we have a bunch of sustainability experts in the accelerator, right? You know, you have to come up with a plausible theory about, well, what is that? What could that change look like? You know, what percentage of people would then have to go on and make additional changes in order for this to really be decarbonizing, right?
Sorry. I totally see where you're coming from. So I'm just kind of wondering in terms of where's the cutoff point of when you can claim that that's the CO2 you've reduced. Do you know what I mean? Kind of like if you're inspiring change from other businesses, or let's say if you're kind of as a connector, like a lead generator for other eco consultancies, etc. When can you stop claiming that CO2 as your effect, if you get what I'm saying?
Yeah, I do. And that's where this point of additionality comes in, is, to what extent are you, to what extent is your innovation itself, the growth from 1,000 users to 1 million users, to what extent can you document that in itself is what's driving the changes, right? And that's challenging. I mean, if we invest in you, then we ask you to commit to reporting your carbon impact, and we have a methodology that we're reasonably happy with, that we give to you to do that with over the lifetime of your venture, right? And hopefully it'll be so huge that someday there'll be several members of staff just reporting back that carbon impact. You'll be familiar. I know I could tell from, obviously, given what you're doing, you're very familiar with this scope 1, scope 2, scope 3 sort of concept. I suppose part of what you're getting at is you're plugging into these customers and you're helping them change their scope 3, right? That might be one way of conceptualizing it, right? And we certainly, scope 3 emissions is part of the impact that you have.
Yeah, that's really.
Are we having
really
a meeting of the minds, John?
Yeah, I hope
okay.
So.
And thank you, Chris. Your elaboration answered a couple of questions that I was having in my mind about low carbonization and decarbonization. So now it's clear. Yeah, I was assuming that decarbonization means almost eliminating the carbon element.
Yeah.
Yeah. Thank you.
Yeah. So look, if so we've got a team where the business idea is basically buying up end-of-life wind farms and then either fixing them or selling off the pieces and putting a new turbine there, right? Now, I mean, this is important. This is important stuff that needs to be done, but we already know about wind turbines, right? This is an interesting play that is going to increase the efficiency of the wind turbine sector overall. Great. Okay. We need that to happen. But, if you're basically saying, well, there's a decarbonizing thing that's already happening and we're going to take it from, X% to X plus 10%, X plus 30%, well, we need that. But of course, we're also interested in the zero carbon. We have a solution that actually completely sequesters the carbon, or causes carbon not to enter into the process, because the customers are no longer doing it with a material object; they're doing it with a service, right? I mean, even that's not completely going to zero carbon. But have I understood your question?
Yes, you have answered.
Okay.
Correctly.
All right.
Thank you.
Thank you. Dali Bondar has asked a question in the chat. So yeah, I mean, we're in our first cohort at the moment, Dali, that started on the 16th of March. In 3 weeks' time, we'll be making our investments. So choosing the 10 among the 22 teams that we're working with at the moment that we're going to invest in. Of the 22, well, at least 4 are buildings focused, buildings based. And we quite, one of the things that really ticks a box on the buildings side is that there's an opportunity, and it kind of relates to the questions that have been asked, is there's an opportunity for immediate impact, right? Because buildings are going up every day. And if you can immediately find a decarbonizing innovation, then, and it can be on the market in 6 months, then you're immediately having that impact, right? Whereas if you come up with a carbon capture from, direct air carbon capture thing, well, we may well need that, right? It may well be humanity's last line of defense, right? But it's not going to be having an impact for 10 years, right? So I'm not saying we don't want to do it, and we've got plenty of investors who want to invest in that kind of stuff. But it's but building stuff tends to be a kind of, oh yeah, well that's going to start the job that we're here to do of decarbonizing quite quickly. I don't know if that helps with if that feels responsive to your question. Okay, all right, folks. I'm going to sign off and have a drink, and please just feel free to get your application started, and you know we could talk at interview, right? All right. Take
Thanks
care.
very much, Chris.
Have a great evening, everyone. Thanks for joining.
Thank
Thank
you.
you.
Bye.
Chris.
Bye.